I've heard you talk about the five energies, and you usually tie this into high probability trading and how you maybe think about markets. Mind sharing a little bit about that? So I have the list here. I'm sure you're familiar with it, but what are the five energies, and maybe how are they used in practice?
Sure. So the five energy method is a trend trading model. And there's more than five energies in the market. So, first of all, let's describe what energies are in the
Mhm.
market. So, the energies are literally the money flow. Okay, the energy of the market. Again, the buying, the selling, not so much the bid and the ask, but the buying and the selling, the dynamic of that. So, let's say, for example, well, most people have watched charts. If you watch an intraday chart live, then you'll see sometimes the charts and the bars are forming real slow. Or if you look in a level two or level three, it's just scrolling real slow, or time and
Mhm.
sales going real slow. And, that gets very frustrating and you just want to like, come on, market, move, move, move. And that's one of its energies. You're in a slow moving market. Energy is slow. Other times, like after a Fed announcement or something like that, or an economic report that's really dramatic, or an earnings report for a company, the market, boom, just goes out like a cannon. It's going fast, fast and furious, and buy,
Yep.
buy, 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 buy. Okay, so that's a fast moving market. That's the energy of the market. So that's just to get people to feel that concept of what I would mean by the energy of the market has to do with money flow. So the three energies that I look for trend trading, number one is trend. So trend means the direction of the market, but there's some distinctions there. So the trend, actually, the definition of the word trend in Webster's dictionary is the extended general direction. So in trading, we don't define trend as just direction. It's not a short term direction, it's the long term direction. So, and not just to be a stickler for the English language, but in trading systems, when you're creating a trend trading system, you're designing a good risk reward profile. Like say the exact opposite of what we talked about before with credit spread. So here we're looking to risk a little bit and make a lot. So we're looking for that market to move up or down, but we'll just say up right now because most people resonate with bullish markets. And that's what you're designing in your system. Okay. So, and then the other thing is early in the new trend. So when we're designing the first energy, it's got to be measuring the long term trend. And
Mhm.
as far as timing goes, we're designing the system to get us early in a new trend. And that kind of resonates with the old saying, the trend is your friend until the end.
Yeah.
So, and the statistical model with that is that the longer a trend continues, the less probable it is to continue. So that's why we want to get in early in a new trend. So we have that big reward ahead of us. Okay, so that's number one. Number two then is momentum. So momentum is the strength of that trend. Back when I first started trend trading, I would look at charts and I'd look at them after I took the trades, and I'd see, okay, I printed out this chart, printed out this chart. I took both of them. One followed through, the other one didn't follow through, and I couldn't tell why one worked and why one didn't. And I'd go through this over and over and over and over. For the life of me, couldn't figure out, couldn't see any difference between the charts. They both looked great.
Mhm.
And they were identical. And the problem was I was missing the energy of momentum. I wasn't accounting for that. So I had a mentor who taught me about momentum in the market. So momentum, literally, momentum in the market is velocity times mass. I mean, well, that's what momentum is in physics. So in trading, it's the speed of the orders that we talked about already. And then mass equates to the weight of those orders, or we translate that to volume in the markets. So velocity, the speed times how much volume is coming through, that's momentum. That's the literal translation of momentum in the markets. So we want to be early in a strong trend. Those are the first two things. Strong trends follow through or tend to follow through the most. Weak trends do not. They're not as sustainable. Could be just a lot of retailers coming in with, one lots, one shares, 10 contracts or whatever, and then it falls back down.
Mhm.
Okay, so early in a new trend, strong trend, momentum, those are the first two energies. The third then it is cycles. And this is what helps us to time our entries. Because as the market's going up, it tends to, ebb and flow, right? Oscillate. And so if you buy the top of a cycle of one of those oscillations, then the market's going to come down, 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 down during one of its cycle lows, and you got to stay in. And it's going to be hard because now, wait a minute, your risk is increasing. and you're not quite sure, well, is this actually the end of that trend? And where do I put my stop in now? How far am I going to let this market move away from me and continue to accumulate the drawdown?
Mm.
So we want to buy cycle lows. And so I've got a way of buying cycle lows that work extremely well for me. So I'm only risking the range of a bar to a bar and a half. So on whatever time frame. So let's say it's a daily chart. The risk I have, I'm looking for the cycle lows within the trend, and I'm going to enter 1 penny above the high of the yesterday's bar, and my protective stop goes 1 penny below the low of yesterday's bar. And that's it. So that risk compared to the reward of a big trend is phenomenal. So when I do get losses, they're just, pennies. So that's the key of cycles energy number 3, nailing those cycle lows to buy in an uptrend, and conversely, nailing those cycle highs to short in a downtrend.
Hmm.
Number 3 then is support resistance levels. And that's where everybody sees, previous swing highs, previous swing lows, floor trader pivots, Fibonacci, whatever you like to use, but levels that are blockages of those energies is the way I describe it, where market participants are going to see those levels, and those would be points of decision or maybe indecision or profit taking. And so we want to look at those levels and watch everything as the market goes into that. Okay, is there still a lot of buying? Is there still a lot of volume? Or do we start getting dojis or spinning tops at these levels? Maybe we should take partial profits. So that's support resistance. Then the 5th and final energy is what I call the fractal energy. And that's just a fancy word for saying I use multiple time frames. So I look to the next higher time frame, and I'm trading in the direction of not trend. I don't care what the trend is on the higher time frame, but I'm trading in the direction of momentum on that higher time frame. So this way I've got strong momentum on both the short term and the longer term chart in the same direction. That's the emphasis I'm looking for, big energy, big move, big follow through, and I want the energy of momentum aligned, bullish or bearish on both time frames concurrently. And that's all there is to it. It's as simple as that.
Hey, it's Evan here. I hope you enjoyed this clip from our full-length interview. Don't forget, if you want to hear this entire episode with even more insights from our awesome guest, you can find it by searching the Smarter Trading Podcast in iTunes or on your favorite podcast app. You can also find all of the show notes for this episode by heading to thetraderisk.com/podcast. Thanks for tuning in.